If you're looking for overlooked opportunities in today's volatile market, Insightful Value is where you want to be. We uncover undervalued companies that others ignore. And today, we're taking a closer look at Amcor, a global packaging giant whose stock has been trending downward. But is this dip a reason to worry, or a window of opportunity? Stick around, because this video might just change the way you look at packaging companies. Remember, this review is for informational and educational purposes only and should not be considered financial advice. So, what is Amcor all about? Headquartered in Switzerland but operating across over 40 countries, Amcor is one of the world's largest developers and producers of responsible packaging for food, beverage, pharmaceutical, medical, home, and personal care products. Their business model leans heavily on scale and innovation, focusing on sustainability and efficiency. From flexible packaging to rigid containers and specialty cartons, Amcor is deeply integrated into the global supply chain. Recently, Amcor's stock has come under pressure due to weaker volumes and FX headwinds, especially in North America and Europe. The market doesn't like slowing growth, but for long-term value investors, this is where things get interesting. Despite headwinds, Amcor still posted over $14 billion in revenue in the last fiscal year and maintains an EBITDA margin around 15%. That's a solid operational base for a company facing cyclical pressures rather than structural flaws. On the earnings side, the company has seen modest declines, but continues to generate consistent free cash flow and returns capital to shareholders through both dividends and share repurchases. Their current dividend yield sits at an attractive level, about 5%, which is significant for income-focused investors. They've also raised their dividend payout for several consecutive years, showing a commitment to returning value even during rough patches. Looking ahead, Amcor is betting big on sustainability. They've committed to making all of their packaging recyclable or reusable by 2025 and have been expanding their presence in emerging markets. If management delivers on these goals, that could mean significant margin improvement and growth potential over the next decade. From a valuation standpoint, Amcor is trading at a PE ratio below its 5-year average and below many of its packaging peers. That suggests the market may be pricing in more pessimism than necessary. For long-term investors with patience, that discrepancy could turn into upside. At Insightful Value, we specialize in these kinds of deep dives. We provide in-depth analysis of undervalued companies, breaking down the key data and explaining what it really means, without the jargon. Whether you're an experienced investor or just starting your journey, our content is designed to give you clarity and confidence. For more detailed breakdowns on Amcor and dozens of other underappreciated stocks, head over to insightfulvalue.com. And don't forget, subscribe to our channel for more no-nonsense, high-value insights you can actually use. Thanks for watching.